All right, everyone. Here we are with ticker symbol HYLN, Hyliion Holdings Corp, previously known as SHLL, Tortoise Acquisition Inc. before the merger, and now we are seeing it under the ticker symbol of HYLN. To all my first-time viewers and investors, welcome to my channel, Invest for Tomorrow, and to all my subscribers, welcome back. Let's jump into this chart. So, Hyliion has actually been in a downward trend since the beginning of October. Since October 1st, we've been going through this for about now 2 weeks. There was a slight recovery here from $28 and it jumped up, broke through the 50-day moving average slightly for a couple of hours up to $34 and some change, and quickly since it has dipped. We've seen it bouncing around with the volatility of the market. Bulls are trying to come back in and the bears have been dominating this chart. Now, the one thing is that this bearish run can only last for so long. I mean, it only can. I know a lot of investors are talking about what's going on. When is this going to turn around? If this company comes through with its innovation and its purpose, this could have a turnaround. As long as everything is real and they show some revenue in their statements and their net income and profit margins, and they come through with something valuable to investors to attract more investors to come in and believe in the company other than just the merger, then there will be an opportunity for this company to continue to grow with its potential and its market share that it can have for what the innovation and product and services they're going to offer. Now, they haven't came through with any of that yet, and that's what most investors are probably waiting for. I mean, this sell-off started from taking profits to now showing fear, uncertainty, and investors that were just in for the ride. And as I've stated, as it continues to break through these support levels that are very important indicators, this will hit newer lows. We're right now at 26.95, and I've stated here, way up here at 25 and 40 cents, 25 and 50 cents. If that gets broken through, this is well on its way to newer lows, certainly, and we're not that far from it. Now, if the bulls can reappear from this point and use the new support level as a support to go ahead and start to break away in an upward direction, they won't see those new lows and they won't see those other lows. But the closer this gets to $25.50, the more we're on our way seeing this chart hit newer support levels and newer lows as we speak, further away from the 50-day moving average. I mean, support was broken through significantly today, and the bulls only appeared about 3 times in the day, and they actually just re-leveled off after hitting the lows and then bouncing back up to these highs here, and we're right now at 26.95. Let's go ahead and move our support level to its new location, to the lowest point of the day, and let's look at the highest point of this slight fall as it leveled off, and it actually touched this nearly twice in the day, this resistance level. So this resistance level is important. There was a rejection there within an hour time frame twice. It continued to hit newer lows, and now it's slightly recovering, and the bulls are trying to come back up. Now, this is an important number here. This is the highest point before the fall continuing, and that is 28.65. I'd write that number down. Very important number, slightly below the 50-day moving average, 28.65. If that gets broken through, this could be on its way back to newer highs. But the first thing that the bulls need to break through is actually 5 cents above that, and that's 28.70. That's our 50-day moving average. And obviously, the 50-day moving average is important. It lets us know on what side of the chart we're in. And right now, we are in bearish territory. The moment we cross it and end up back up here, we're back in bullish territory. But before getting there, which 28.70 is an important number, we need to break through the first resistance level for the bulls. And the bulls need to break through this. That is 27.10. 27 and 10 cents. If the bulls are able to break through that, that does not signify that the bulls have gained control, that they're dominating the chart again. It does not signify any of that. This is just an indicator of which way this is going for us investors to know that there's some momentum being built. So the bulls need to turn 27.10 into a support level so they can start to break away and hit newer highs. but they won't have control until they break through the 50-day moving average of 2870. That's the most important number here, so that this can start to reach newer levels of resistance and newer highs, breaking away from the 50-day moving average in an upward direction. Now, again, 2710 is just an indicator to let us know where this is going and where it might be heading, but 2710 does not mean, okay, that got broken through, the bulls are in control again and they're starting to build momentum. No, they're not in control again. There is some momentum forming, but they need to break away from it and reach newer highs to get closer to the 50-day moving average. We won't know that the bulls have control again over the chart until they break through the 50-day moving average. Now, on the other hand, we have what the bears want, and the bears are trying their best to break through this number and work their way closer down to $25.50, $25.45, around that area, because once they break through that, this could be on its way down, as I've stated, to newer lows and newer support levels. But before getting there, the bears have to break through the lowest point of the day, which was 26.26. If the bears accomplish that, this is definitely going to hit newer lows and newer support levels. I want to emphasize to all investors, pay close attention to how this stock is reacting at that point and how quickly is it moving down to newer support levels and newer lows. Because if this is moving fairly quickly like it did today, it was just quickly moving down to newer lows, then the bears are definitely dominating this, pulling it further away from the 50-day moving average in a downward direction. Now, if it breaks through it and it kind of hangs out sideways, there could be a potential opportunity for the bulls to load up on stocks, take advantage of the price, and bring this one back up. Again, the bulls, by breaking through the resistance up here of 2710 and working their way up to newer highs, is a good sign of building momentum to rally up for the bulls. But again, they have to break through the 50-day moving average to reach newer highs and newer resistance levels. But I would pay very close attention to how the stock is behaving at 26.26, who's dominating the chart. Put your 1 minute, 5 minute, 15 minute chart frames so you can see what is going on. Look at the inflow and the outflow of stocks so that you guys can make your own rational decisions as investors with these cues. I hope that you guys are well equipped for tomorrow. If you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell so that you don't miss a single video that I post. Share this with your friends and community. Don't forget to hit the like button and let me know you watched this video. And thank you guys so much for watching. And at the end of this video, there's going to be a pop-up video. In that video, I talk about the S&P 500, how it's risen in several days. You can actually look at the specific dates and see the behavior of the S&P 500 index, what's been going on, how it's been reacting, and how it's benefiting from these Federal Reserve pumps. These Federal Reserve pumps are actually rising the S&P 500 several points. What does that mean for us as investors? Well, if the S&P 500 index is rising up several points, there are several ticker symbols, or most of them, I should say, are rising up with it. That means that there are ticker symbols rising anywhere from 30 cents to $3 per share. I know it doesn't sound like a lot, but per share, that does add up. 30 cents to $3 per share adds up. As I always say, if you put $1 into the market and you get back $2, you've done a phenomenal job. It's always about putting in what you got and taking out more than what you put in. That is a successful trade. Profits are profits. So I'm not there to tell you to buy, sell, or hold. I'm just here to inform every investor and viewer that there's an opportunity to maximize profits, minimize losses, and go ahead and look at the strategy, look at the charts. They speak for themselves, and you guys have to do your due diligence and research so you can make your own rational decisions as investors. I hope you liked the video as well. Click on it, and if you're a first-time viewer and you still haven't subscribed and you have the time to watch that video, which I believe is very informative and helpful, and you haven't subscribed, I hope that video is worthwhile to you so that you can subscribe and be ready for the next one, because I do a weekly series on that and I update every investor on what's going on in regards to the S&P 500 and those pumps. Hope that you like that video. Click on it. It should be popping up soon. And again, thank you guys so much for watching, and let's make some money.